India is a very interesting market. We've had a long history. We've had formal financial stock markets for a very, very long time, but they've really grown in the last 5 or so years. After COVID hit, we've perhaps had one of the largest explosions in number of investors in any given market. The financials are completely in English, whether it comes to financials, their analysis, all the stats that you need on any company. Perhaps one of the greatest periods for value investing that's going to come. Unfortunately, it may come after a period of a lot of volatility.
We're going to talk about some international equities, more specifically Indian equity markets, how they compare to the US markets and other international markets. I'm speaking with Karan Rajpal. Karan, thank you for joining me.
Sure, it's a pleasure. Thank you for having me.
Okay, so let's talk about your investment style. You're a value investor, but you are in India. You focus on Indian markets. I never spoke with anybody that focused on Indian markets, so I'm really interested to learn more.
Sure, thanks. And I think it's great that you're focusing on different parts of the world and looking at those markets. India is a very interesting market. We've had a long history. We've had formal financial stock markets for a very, very long time, but they've really grown in the last 5 or so years. After COVID hit, we've perhaps had one of the largest explosions in number of investors in any given market. India, of course, is one of the world's most populous countries, but stock markets weren't really looked on as very favorably in the past. But the last 5 years, they've been absolutely fantastic, not just in terms of, the returns, but also the breadth of knowledge that's come out with so many people discovering companies. I specifically, focus on value investing in very small Indian companies. These could be as low as about, 10 to $15 million in market capitalization. So, of course, India is a much smaller and shallower market, close to about 5,000 listed companies. And now you have, even smaller companies that are coming up. So it's a market in transition. It's grown by a lot over the last 5 years. And of course, it's been very vibrant for the last 20. So it's been a fantastic time so far. I've been in it, investing for about, I think, 14 or 15 years this year. So it's been fantastic so far.
And what if somebody wants to invest in those companies listed in India? Are the financials in English, or do they have to speak a different language?
The financials are completely in English. India is the world's largest population of English speakers today. The financial markets are completely, available in the English language, whether it comes to financials, their analysis, all the stats that you need on any companies. I think a lot of global websites now cover Indian stocks. I think the only thing that somebody who's investing from outside India will have to figure out is the vehicle that they want to choose. A lot of people do it through structured funds, and there are a few India-focused ETFs also available. So we've seen a lot of inbound interest through those as well.
Obviously, the equity markets in the United States are the most popular, but they tend to also have the highest, valuations. It's hard to find cheap stuff.
Yeah.
How do the valuations of companies compare, Indian versus the United States?
Sure. So I think we need to come at this from a very large lens, which is India is today roughly about 4 to 5% of the global market cap. So if you take the value of all listed companies in a lot of countries in the world, India only represents about 4%. So it's a fairly tiny market, despite a very large population size. So our per capita numbers are fairly small. Valuation wise, I think the lenses that you need to put is India still does not have, a very large number of global companies. So there are a lot of companies that, are large and have global revenues, but you could perhaps, take 50 or 100 companies and you would get to folks who would do, say, somewhere about $1 billion or more through revenues outside. The US companies, they're more globally focused. They do very, very large numbers in the US, and many of them do very large numbers outside as well. The US, of course, is the world's largest consumer market. Its economy is such that, with California, just a state in the US, it's the world's fourth largest economy by size. So I think those are some of the filters that we need to look at. Uh, India, I think there is a lot of growth room that's available. It's a country that's been growing at, say, roughly about sub 7% for last many, many years because we've started off a very small base. So I think those are the lenses that one should look at. Uh, I typically do not invest in index funds, and hence I do not look at the S&P 500's PE ratio and the India's Nifty 50 PE ratio and say this one is expensive or this one is cheap. The way I want to look at it is, regardless of the size of the company, what valuations it's available at, and what do we see, say, 6 to 8 to 10 quarters down in the future.
Hmm. As a value investor, you say you consider yourself a value investor.
Mhm.
What what influenced your what kind of individuals influenced your style? Why is value investing something that you identify?
So, I am a second generation investor. My father's been an investor for almost the last 40 years. I started out, more or less working under him and learning investing under him. And my learning came by, just my opening up a stock brokerage account when I turned 18. That's the age you can open it in India. And then because I had a few stocks in my portfolio, I started looking at them over a period of time, I started investing again under my father's tutelage. Value investing is something I discovered later. The style of investing we do, it's called value investing as I started reading more on the various approaches to the market. We basically had a viewpoint into companies that were trading for pennies on the dollar. So we were basically, if we look back at what Warren Buffett used to call cigar butt companies, that there's one last puff that is left. Those were the kind of companies we were mostly looking at. But over a period of time, I have tried to move up the cycle where you're buying something which is fundamentally superior in the long term, but is temporarily available at a very, very cheap, obnoxiously cheap price.
Are you talking about more companies that have some kind of moat?
Yes, absolutely. So typically, I try and look at companies which have hard physical assets, and they're in excess of what the market capitalization is. I think the commonest scenario in which I invest in companies is, this they have large manufacturing facilities. The commodity or the product that they make is undergoing some kind of price or time correction in terms of delivering margins to them. Uh, the capex they have done before this down cycle has basically also increased their interest costs. So EBITDA and bottom line are both negatively affected. The idea is to accumulate them over a period of time and wait for the upcycle to come in. And obviously, the industry itself should not be in terminal decline. So, for example, in India, I have invested quite a bit in fertilizer and agrochemical companies. We're going to grow food, whatever happens. So that is a kind of industry where you can play a cycle. On the other hand, you can have, newspaper companies, they're in terminal decline unless they, become truly digital companies. So the idea is, find something which has hard, provable assets, which have delivered both high profits as well as high top lines in the past, and buy them over a period of time. The other thing to remember is I am a career professional. I draw a monthly salary. I only have certain amounts of money that I can invest every month. I do not typically take very, very large positions at one go. I would pick up a set of, say, 4 to 5 companies that I want to invest in. I typically would build my position about 8 months to a year, and then have it as a sizable part of my portfolio, and then typically hold them for between 3 to 5 years.
You said you're a career professional. What is it that
Yeah.
you do for your career?
I'm a marketeer, so I've spent about close to 20 years in marketing. I've run a business in the past, but over the last, I would say 15 years, I've basically spent my life in marketing. And until recently, I was heading marketing for a fairly large multinational IT services firm.
Now, this is interesting because obviously marketing and sales are very important for public companies. That's how they grow revenues. Has this
Mhm.
experience helped you or shaped in any way your investing?
So I think there's a bit of a dichotomy there. Typically, companies with large brand moats, which brands which are preferred by consumers, they typically trade at fairly high multiples. And it's not very often that you get them. They're almost like defensive plays for a lot of people. I don't end up doing a lot of, using the power of brand. But what that actually also does is a lot of the companies with powerful brands are typically growth stocks. You don't really always find a lot of value in them. That has also meant I've missed quite a few opportunities. Like Apple was clear as day to me, but I completely missed out because the valuation never made sense to me. And I'm talking roughly about 10 years ago, probably after the first couple of iPhones were out. But that has also meant the things that I understand, I do them well.
Hmm. And you, at the beginning of the interview, you talked about how you're not afraid to invest in companies that have smaller market capitalizations. So talk about those smaller companies because I personally focus on microcap stocks, so I'm very familiar with it. But in
Hmm.
terms of
Hmm.
valuations, you got to look at the
Hmm.
valuations differently for those small companies, I believe.
Absolutely. So I think the way to look at them is simply like I said, you have to look at the full fat size of the company. So whatever assets that it has at the peak of their productivity and the peak of their profitability, what are they worth? Some sectors have fairly long, periods where the product is not doing very well. I talked about fertilizers and agrochemicals. These are, positions that I've made over the last 7 or 8 years, and it took a fairly long time. It's been a 5-year cycle, but essentially you have, a lot of hard assets that are being built over time. The promoters are infusing both equity as well as debt into the company to build up, their assets. The idea is very simple. If today a company which is say about 30 to 40 to 50 years old has, certain plants that are that old as well, if they were to go in and build those plants again, there's a fairly high chance they won't put the money into them again. But that also means nobody else in the market is building those plants today, right? So if you have a large agrochemical plant, environmental concerns don't let you build them out in the same way as you could in the past. So the plants are relics, but they're also, the only productive ways to consider and create those assets. I'll give you another example, which I think a lot of your viewers will kind of identify with. If we look at copper as a material, we've had significant underinvestment in the mines to basically get copper out of the ground and refine it over the last 10 to 12 years. We're now getting into a situation where most of the world's ready mines, they're doing, their peak capacity or near peak capacity right now. Environmental concerns mean that no new mines are getting approvals in the very countries that the copper is actually present in the ground. And on the other hand, there's this entire narrative that electric vehicles, solar panels, and all the other associated technologies are going to need a lot of copper. So we're fundamentally getting to a place where the copper mining companies, whether you look at the junior miners or even the global miners in copper, you will have to come to a place where the tightness in the product will cause the prices to rise because a lot of install base for the categories copper is used in. will continue to increase their production, but copper will kind of continue to remain tight in supply. So maybe for the next couple of years, copper will trade like a commodity. But once you move beyond that, say somewhere about financial year 27 or 28, you will have a structural move that will have to come in copper because the entire world is basically, getting to a place where they're going to need it in vast quantities, and new supply is not coming up. So this kind of thesis, I think we can form it across a variety of industries and a variety of companies, and that's where you kind of try and find value.
Well, I'm very familiar with copper and
Wonderful.
dynamics, but how do you so do you invest in some of the copper mining stocks?
Yes. So India, unfortunately, doesn't have a lot of copper mining stocks. So here, I have actually taken exposure in global markets. So, like I was talking about the junior miners ETF that's listed in the US. There's also a global miners ETF. I would like to pick companies, but international investing choices in India are very, very limited. There are not a lot of vehicles that you have. The other unfortunate thing is unless you're operating as an LLC out in India, you cannot invest a lot of money every year. And if you kind of invest that money, you have to pay a lot of withholding tax. So you're basically putting money with the government for about, I think, 6 to 7 to 8 months. So it's unfortunate. So copper I really like, but I can only take so much exposure right now, just because of where I'm based and how my financial life is set up.
But are you able to buy stocks that trade
We are able
in
to,
the US, for example?
yes, yes. So most US stocks, we're able to take positions, but typically what happens is that you would have, say, X number of ETFs and stocks that are available in the US markets. Only so many would be available on the specific brokers that we can use in India. So, say, for example, if I wanted to invest in microcap companies in the US, so the OTC, over the counter traded companies, you don't really get a lot of access out here in India. Only when you form a company and you have a certain net worth, you can basically then start doing that. Repatriation is very difficult. It's very costly. And the tax treatment for foreign stock ownership versus Indian stock ownership, it's not very, very attractive. So by design, India has fairly strong capital controls, and that also informs the kind of investing decisions one can make.
What about do you have access to the Canadian exchanges? Because when we're talking about mining companies, Canada,
Yeah,
Canadian exchanges are the
yeah.
are the center for the mining companies.
So the way we have access to it is if the Canadian company is listed in the US markets as a tradable security and the brokers that we work with, they have it available, we can get to them. Otherwise, like I was saying, the global miners ETF would also include certain companies from Canada. Uh, the number of choices that we have are very, very limited. And even after you've identified the opportunity, done the homework, and you get to identifying the company and you know basically getting to the point where you're ready to put your money in, you would get to know that the brokers that you're working with, they do not have all the companies. And you really don't have a place where I can go to 10 different brokers and look for the ones that have the companies that I need. So you essentially just take a step back and say, it's too much work just trying to invest. I would rather than find things that I can find in the home market and basically move from there.
Mm, okay. Um, do
Mhm.
you have any final thoughts that you would like to leave my listeners with?
I think the last 4 or 5 years have been absolutely great for all kinds of investors, especially those who invest in growth stocks and those who've invested in the largest companies. I think a rotation in the global financial markets is underway. So ex-US markets, ex-S&P 500, we're going to see good things. The Indian markets in the moderate short term, I'm not very positive because we've run up a lot over the last 20 odd quarters. It's a little berserk out there. You'll meet more people from my country who think about the market in ways other than how much money they're making from them. They'll let you know about that. But I think it's perhaps one of the greatest periods for value investing that's going to come. Unfortunately, it may come after a period of a lot of volatility. So those who can, stomach the volatility that's going to be there in the next few quarters, I think they'll come out much, much stronger on the other side.
All right. Well, thank you very much for doing this interview.
Absolutely. It's a pleasure. Thank you so much for having me.